stop whatever trading strategy or system that you are currently using and pivot to this one, okay? I call this the manipulation model. In this video, I'm gonna be doing a trade recap in real time. So while this trade is still running, I'll show you guys exactly why I entered this trade. Of course, I also call this out to my pro Discord members. So if you guys want access to my pro Discord for all of my plays in advance, make sure to click the first link in the description below. But this was an A setup, okay? I said going into the trade, this is an A+ setup, and I listed the reasons why. Guys, very, very simple system, not rocket science here, okay? Not rocket science. We're waiting for a few confluences to align on our chart, and then we are entering the trade. Also, if you're wondering why the background looks different, I just landed in Bali, Indonesia. So content's gonna be crazy here. So make sure to leave a like for the new content to come. So let's jump into this trade, okay? Here was my entry. We are currently at break even with a small TP1 partial at this high right here. Second TP is gonna be this high here on Ethereum. So this formation here with this entry that I'm showing you guys has around 70 to 75% win rate on TP1, okay, with my own back testing, with my users back testing, and just with my own live data. So that's why when I say, okay, this setup is an A setup or an A+ setup, I know going into it that there's a 75 to 80% chance that this will most likely play out in my favor due to many reasons, right? So step number one is we need to mark out our area of interest. Now, what is an area of interest? Well, that is just a key level with multiple pieces of confluence. What I like to use is something called key horizontal levels. I also like to use the optimal trade entry, which is my golden pocket fib down to the 786 fib level. Now, this is valid because if we go to a higher time frame and do a top-down analysis here on Ethereum, it is clearly bullish, displacing to the upside, large bullish candles to the upside. Trends more often than not continue, so I want to catch this bullish trend. There's no point in me looking for short positions until there is a valid shift in structure on a higher time frame, which currently I do not see. All we're seeing is a retrace on a lower time frame, meaning longs are valid. So we're gonna actually mark this out here. So step number one is we need our high time frame bias. On Ethereum, this is very simple, guys. We're obviously in an uptrend on a higher time frame. All I mean by top-down analysis is start on a higher time frame, right, and then go down to a lower time frame. Step number two, we want to see price at our area of interest. In this case, our area of interest is here at our optimal trade entry, which is a zone between the 0.618 and the 0.786 Fibonacci retracement levels, just pulling from the most recent swing low to that most recent swing high. You can see that these fib levels automatically overlap with our key horizontal level. I can see that price has reacted from this level as support in the past, failed this level into resistance, and now we're currently looking to test this level as support once again. So that confirms to me that this is an area of interest, or there are multiple pieces of confluence at this level. All we're doing now, after we have our high time frame bias in our area of interest, is we are looking for bullish momentum. You guys might be looking at this chart and saying, well, Matt, why didn't you enter here as opposed to here? This indicator at the bottom of my screen here is called the Easy Oscillator. This is my own custom momentum trading oscillator. Again, if you guys want access, make sure to click the first link in the description below. But what this does is show you guys these real-time bullish and bearish divergences. A divergence in trading is a discrepancy in momentum and price, meaning when price is making a higher high and momentum is making a lower high, that is a bearish divergence. And the opposite is true for a bullish divergence. So at this point here, right, if we go into replay mode, I can see that the momentum oscillator on the 1 hour is oversold. So all I'm looking for now is a clean entry. The reason I didn't take the trade at this level and I waited for that second entry is because number one, we didn't see a strong bullish candle creating an inverse fair value gap, which completes our manipulation model. And also we can see that we left this equal low behind. Take note of this. This is sauce. You don't hear this very often on YouTube. Whenever you see you have one major swing low and another swing low that comes right down to that first low, but doesn't take its liquidity, meaning it doesn't come below creating a swing failure pattern. It just stops right before taking out this low. This is a strong draw on liquidity. I know by looking at this chart that price is most likely going to come down to take out this low. So all I'm waiting for now is for price to come take out these equal lows, creating a bullish divergence on our oscillator. That would be the final entry trigger, and then I can finally look for a long position at this level. Remember, if there is not at least a B+ setup or an A setup on my chart, I am not going to force the trade. This is key. A lot of you guys are forcing setups that you know aren't high probability and aren't A+ setups. I will happily not take a trade and miss out on the potential gains as opposed to force a trade setup and lose that trade because I know I didn't follow my rules. So here we have this equal low here. We don't have those bullish divergences yet on a 1 hour time frame, which is what I'm looking for to enter this trade. So all I'm doing now is I am waiting. Okay, boom. We can see we saw a sweep of these lows, right? Sweep number one and sweep number two. So a sweep of two sets of liquidity here, strong bullish candle. And finally, there we go with our bullish divergence. And step number four is we have an inverse fair value gap. This confirms our manipulation model, and this is how we actually enter the trade. So as you can see here, on this aggressive move down that comes down to take out this low, we actually form a bearish fair value gap, right? We have one candle right here, two candle right here, and then three candle right here. So what we are waiting for now, guys, is for price to inverse this bearish fair value gap, meaning we want to see price close above this bearish fair value gap, confirming our manipulation model, which we get on this candle closure right here. So that is my entry trigger. My stop loss is a hard stop loss at this low, or a 1 hour candle closure below this inverse fair value gap. So even though it's showing my risk to reward as all the way down here, if we get a 1 hour candle close here, then my trade thesis is invalid. And step number 5, which is just a bonus, this is what makes this trade setup an A+ setup, is we have low resistance liquidity here, okay? All that is this bearish trend line that we are testing. The more times we test this liquidity trend, the more likely we are to break out of this trend line eventually. That is when you see retails get in on a trend line break. However, we are getting in before the trend line break with our manipulation model. Again, the reason I call it the manipulation model is because you are literally waiting for the manipulation move, stopping out retail before going higher. It's really good to have either low resistance liquidity or an equal high to target as your take profit. Meaning if I see one high right here and a second high right below that first high, that would be a strong draw in liquidity, making the setup an A setup or a high probability setup with a 70 to 75% chance of hitting our TP1 and being a profitable trade. Okay, so now that we understand all of these steps here, where do you target as your take profits? I'm simply going to target the structure highs, take profit 1 right here, my take profit 2 right here, and then target external liquidity as my take profit 3. Now, the way I trade this model is I like to bring my stop loss to break even at the most recent structure high, which technically speaking would be this high right here. Now, obviously, I'm not going to move my stop loss to break even after this tiny little move, like this risk to reward is shit. So in this case, I actually moved my stop loss to break even at an underside test of this low right here. So if price hits this level, which it obviously has, this is when I will move my stop loss to break even, locking in the trade. So no matter what, I don't lose anything. With my first take profit here, I'll take around 30% of the trade off here. Second take profit right here, I'll take probably 30 to 40% off the trade right here, and then leave the rest running for that massive risk to reward. So this is how the trade looks currently. Before you enter the trade, you need to draw out on your chart what you want to see in advance. That's why inside of my pro Discord, I'm giving you guys all these trade setups in real time and literally telling you guys when I'm entering. You can see that after I enter the trade, it kind of chops around a little bit at my entry. That's okay. If price wants to chop around and do whatever it wants to do, I'm fine with that. I have my invalidation level set and I have my break even level and my take profit level set before I enter the trade. I'm not micromanaging it once I enter the trade. I'm creating a trading plan in advance. So as you can see, it's already hit our TP1 and our stop loss is now at break even, and we will let the rest of the trade ride. Again, if you guys are interested in my own custom trading indicators, you can use this strategy out for yourself, as well as get access to my pro Discord where I'm calling all of these trades in real time. As you can see here, ETH at key level with bull divs forming a 1 hour bullish inverse here, and I am going long. Explaining to you guys my reasoning behind this trade and even telling you guys when I am going long. That's just a small part of what we offer inside of the pro Discord. We've also released copy trading this week, which means you guys can copy the exact trades from our pro analysts completely automated, meaning you don't even have to be on to take these trades. Our APIs will automatically follow these trades for you, so you can just sit back and focus on your own trading while following our pro analysts completely hands off. So again, that's gonna be the first link in the description below. That's gonna be it for me in this video. If you guys found value, make sure to leave a like, subscribe to the channel for more trading content, and I will see you guys next video.